Hey everyone, my name is Michael Valtos, and I'm the founder and trader at orderflows.com. And today I'm going to be talking about how to use order flow to find true support and resistance. And people, you always see a lot of traders talking about support and resistance, and it's sort of one of the basic tenets of trading. But honestly, a lot of people misunderstand support and resistance. They lump it in with supply and demand, and they just don't really have, I think, the firm understanding of trading with support and resistance. And just imagine what your trading is going to be like once you understand support and resistance. I said, most people, it's a term people throw around. You watch TV and you see guys on TV saying, well, I think the S&P's got resistance up here at 2,600, or Goldman Sachs sees support at 2,550. But really, what is that? Most traders, when they come to the markets, they read book on trading, and they see a picture perfect chart like this, right? They see, well, resistance tested this price 3 times and support tested it a few times, so that's clearly support, that's clearly resistance. But you know what? The market doesn't trade that nicely. We wish it did all the time. The markets has a mind of its own. Sometimes it seems, it goes up, it goes down, it goes sideways, shoots back up, every which way but loose. And if you can identify support and resistance when it happens, not after the fact, that's going to give you an edge over other traders, right? Everyone always talks about you got to have an edge over traders. And going back to the textbook example of support and resistance, most traders, they wait for the market to retest the level 2 or 3 times before they come out and say, hey, there's resistance there or there's support there. But you know what? Traders trade. They don't sit around on their butt waiting for the market, for confirmation. It's what they're doing is they're analyzing the market based on the information that they have, and when they hit a level and they see resistance, that's when they sell. They don't sit there and keep waiting for it to come back and test it, wait for it to come back and test it. And if you knew the first time you trade up to this high here that there was resistance, you could get in when it tests it again. You're not sitting here waiting for it to come back up here and test it and then sell off. Or if, when people use support and resistance, they just use it as, when you have a high or a low, they don't take into account, as the market is moving, whether up or down, you're going to have supportive buying on a move up or resistance selling on a move down. So, here on this little bit of a rally here, there was supportive buying, and you can see how the market came back down to that level. But honestly, most people overlook the supportive buying or the resistance selling that's going on as the market is trading. Everyone here is basically trading the goal line, the goalposts here. They're not trading what's going on in between, and that's where the real money is made. So anyway, that's just a brief preview. So for those that aren't familiar with myself, my name is Michael Valtos, and I've been trading futures for well over 20 years now. Most recently, my experiences, I've been 8 years at JP Morgan. I was the vice president of futures trading. I spent 4 years at Cargill, which is the big commodity trading firm. I was a trading desk manager there. I even set up a trading desk in Singapore for Cargill. I spent 3 years as a Eurex trader at Commerce Bank, where we traded, pretty much every financial contract in the world. Mainly the Bullens, Bobbles, Shats, but everything against it. All the interest rates against it. I spent some time at EDF Man on the global macro trading desk, where everything you could imagine, anything that's exchange traded, we pretty much traded. And I started on the CME floor as a runner, actually, and worked my way up. When Globex started up in the early 90s, they needed guys to go up after the market closed to start trading Globex, and I took that as my opportunity. Being at that time in my 20s, and being a little bit of computer illiterate at the time, I was interested in it, and luckily that's the way the markets went. So when I talk about support and resistance, I'm talking it from an institutional side. I'm not talking it from as a retail side, where I just get this stuff out of trading books or listening to people's YouTube video. No, this is actually how I traded. And when you're an institutional trader, it's much different than if you're just a retail trader, because you've got a lot of size to move. I'm not just talking about 50 or 100 lots. I'm talking in the thousands, and it's not easy. Sometimes it'll take a few days to move a position. So, over the years, I've gained what I consider priceless knowledge over the years trading futures. And, I've had great success, and I've had big failures also in trading. There's been times I thought I was going to lose my job, but, the firm stayed with me. And in 2013, I left JP Morgan after 8 years to spend more time with my family. I was still trading. I was still trading for myself, though, not for anybody else, just my own money. And in 2015, I started up orderflows.com. And the way it developed was I was writing a book on trading order flow, and the software that I was using was okay, but it didn't really do what I had hoped it can do, because I was still doing a lot of manual analysis on a calculator in my head. And I know that if I could have it programmed, it would take a lot of that extra analysis off my plate and make my trading world, in the sense of what I could do, what I could watch, much bigger. And it runs on the NinjaTrader trading platform. So it's just an add-on for NinjaTrader, because NinjaTrader, they've already got the data, the platform there, and so it's just an add-on to sit on top of there. And the reason why I created the orderflows.com, I said I was writing a book on my experience of trading, and I wanted to take order flow trading to a different level, right? A level that's going to be easier for a lot of traders. And I want to give people insights into the market that they're never going to be exposed to. Most people are never going to be exposed to trading big size. So before we get started, all I ask is, just turn your cell phone off or put it on silent. Like being in the movies, no distractions. If you're on Facebook, close it down for now and get a pen and paper handy. Hopefully, you can pick up a few notes that can help you in your trading. But I want to go through a brief disclaimer. This presentation is for educational and informational purposes only. It should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. And the reason I go through disclaimers, because I want people to realize there is risk involved in trading. Trading is not easy. It's not like you see these people send me links to these YouTube videos, and there's these guys saying, stops are for wussies, and I don't need stops. And they talk about how they blew up their accounts. I mean, gosh, who wants to blow up an account? Nobody wants to blow up an account. That's not what trading is about. Trading is about being consistent and taking money out of the market regularly, right? I mean, this is what I did for 20 years professionally, and this is what I do now for the last, gosh, what year are we now? 17. For the last 5 years privately. So, it's not about taking huge risks. It's about taking calculated risks and understanding that there's risk and reward in the market. So what I'm going to talk about today is what is order flow, just very basic coverage of that. I'm going to talk about why traders fail with support and resistance. Then I'm going to move on to how to derive support and resistance with order flow, how to take advantage of market reversals, range-bound markets and trends with order flow, derive support and resistance. Finally, how to use support and resistance to find very low-risk trades. I'm talking about low risk, 3 ticks per trade, with a 5-to-1 risk-reward ratio, right? That's really what you want. You want to have very small risk, but you want to have big rewards. And ideally, you want to be consistent. And if you stay to the end, I'm going to show you how to get my book, Trading Order Flow. And it's really, it's my contribution to the trading world. That's how I got started with orderflows.com, was by writing this book. So really briefly, what is order flow, right? It's simply the way orders are executed in the market when they're transacting as they're flowing into the market and being traded. Hence the name order flow. And it's from the way orders are executed, a trader can determine things like market imbalance, aggressiveness of other traders, determine the strength of a move, see support and resistance. And this is an order flow chart. Okay, if you're not familiar with it, there's different types of order flow analysis. And a volume footprint chart is, to me, order flow. Now, there's another type, it's trading on a dome, right? We all know the trading dome, depth of market, price ladder. It's got various names. And in a price ladder, when you're trading that, you're really looking at what's going in above and below. It's more order placement, not necessarily order flow, because it's not actually being traded. Whereas what's being traded will show up on a volume footprint chart because that's actual volume, right? That's recorded on the exchange. I don't really care, if someone throws in 50 lots, 50 lots, 50 lots at every price level going on the way up, um, if they're traded and they got a position on, eventually they're gonna have to get out. To me, that's where it becomes important, not just because people are placing orders in and out. And again, there's depth of market, there's a volume footprint chart. My order flows trader software is one. There's other ones, market delta, and other price other footprint charts out there on the market. And really all it is a way of organizing data that makes it easy to see how limit orders and market orders are affecting the market, so traders can make a more informed trading decision. Again, that's just a brief summary of what is order flow. And on a volume footprint chart, there's a lot of information on there, and you can actually take this information and make better trading decisions, right? Once you know the volume that trades at certain levels, you can know if there's supportive buying or there's resistance selling, or if there's price rejection or price absorption. There's just a lot of information that traders are just neglecting. I mean, it's there. Why wouldn't you use it? So the main focus on today's presentation is about support and resistance, and why I think most traders fail with support and resistance. And again, when you come into trading, you look at these nice books, these nice trading books, and you learn a fixed model of support and resistance, and it's all theoretical, right? Like, it's like fairies and unicorns. You see price trades a level, it sells down to support, it rallies back up to resistance, sells back down to support, goes back up. That's fantasy land. The markets aren't like that. That's not how they trade. And if you ever watch Bloomberg, CNBC, you see these guys on TV all the time. I see resistance at 2,600, or I see support at 2,500. And really, those are those guys that live in this fantasy world. I know some of these guys, and I mean, they're smart guys. I mean, they went to top schools and all that, but they don't understand the mechanics of really what's going on in the market sometimes. I mean, they just see these price levels. Well, price traded here, so there must be support, or price traded here, there has to be resistance. Now, there's a great book on trading. It's in its 10th edition already. I think it came out in the 50s. Robert Edwards, John McGee, Technical Analysis of Stock Trend. And you go to Amazon, you go to the library. Most libraries have it, actually. And it's a terrific book. Like I said, it's written over 50 years ago. And they define support as buying either actual or potential in sufficient volume to prevent any further downward movement in prices for an appreciable period. Resistance is the opposite of support. It's selling, right? Either actual or potential in sufficient volume to satisfy all bids, thereby preventing prices from going any higher for a while. And when you think about it, it actually sounds a bit like supply and demand, right? But it's actually different, right? The term support refers to the price at which buyers are willing to step in and buy enough of something to temporarily stop or possibly reverse a downtrend. And conversely, resistance is a resistance level is a price at which sellers are willing to sell enough of something to temporarily stop and possibly reverse an uptrend. And when you think of that, right, like I said, it sounds like supply and demand, but it's actually slightly different. Okay, and we got Black Friday coming up, and Black Friday is always a great example of supply and demand. In terms of supply and demand, support is the price level at which demand for something exceeds its supply. That's why the prices rise, right? You have more demand than supply, and resistance is the price level at which supply of something exceeds its demand. That's why prices go down. And just like on Black Friday, there's a lot of TVs for sale, very cheap, and that's when people wait to buy them. And traders go wrong, and they don't realize or fail to recognize when demand exceeds supply and when it happens, or when supply exceeds demand and when it happens. What do I mean? They like to wait for confirmation. Traders like to wait for confirmation, and that's the difference between, I think, professional traders and amateur traders. I don't want to say retail traders. I'll say amateur traders. And why do I say that? Is because the traders trade, right? Players play. The the starters start, the bench warmers sit on the bench until they're called in, right? They don't wait for confirmation. You know, the traders, they go out there and then they trade the market. They don't wait for confirmation. And what do I mean? Black Friday, right? This next week, you could go to Best Buy, 65-inch TV, $750. Okay, 65-inch Samsung TV. That's a great deal, right? So if you know you're going to be buying a TV this year, when are you going to buy it? You're going to wait for the price to go down. And when's the price going to go down? It's going to go down on Black Friday weekend. That's when you're going to buy. You're not going to buy it in October because you're thinking, hey, a month from now, I could get it for a lot less, right? So that's why on Black Friday, you hit a support level in the market. Everyone comes out to start buying, right? And the stores, they don't sell every TV at such a markdown. I mean, you know, they have they mark some down. But you know what? The people that want it, there's the demand in that market. The demand exceeds the supply, and they're aggressive. They just come in and they start buying it, right? They don't wait for the next time it comes down. No, they've already been waiting, right? They know that this is now. This is the chance to buy it. You know, they may have to wait. They don't buy it now. They're going to have to wait another few months. You know, maybe till after Christmas or God knows next year to buy it. Whereas the guy that's waiting for confirmation, you know, he's just sitting there, you know, waiting. Okay, you know, and I know people are going to say, well, yeah, you know, I want confirmation because, you know, I'm a conservative trader. I don't want to take risks. Okay, but you're going to miss out on a lot of the trades that's going on in the market. A perfect example is a reversal trade, right? If, you know, on the low down here, right, if you're going to sit here and wait for confirmation, if you're going to wait for a double bottom to come in, it may never come in, and you're going to miss that whole move from the low all the way up to the high, right? Wouldn't you rather take here, this earlier trade with the blue arrow here, get stopped out a little bit? You know, you're only talking, you know, 4 or 5 ticks, 6 ticks. Okay, you're wrong. You wait for the next sign, okay, and then you catch it. You know, you're risking 4 ticks here, 5 ticks, but look at this. It rallies from the low, 53.93, all the way up to new highs, 55.55. But you know, that's what it is. If you're going to be sitting around waiting for confirmation, it's not going to come. You know, you're going to miss out on all the trades that's happening. Now up here you had to sell. Okay, well, the first time you didn't get a signal in the order flow telling you that there's aggressive sellers up here. You got it the second time. But if you know, if you're trading, you know, you're waiting for a pullback. I mean, yeah, maybe you can make that argument that it came back. You know, but honestly, you wouldn't be looking at this first signal. You'd be just waiting for something in the order flow to tell you that, hey, there's resistance selling going on here. But more importantly, you know, you want to catch those big moves. And sometimes, you know, if you're going to wait for confirmation, you're not going to get the TV. You know, you're not going to get it because you're going to be sitting here waiting for the price to come down, and it may only come down once, right, the first time. So that's where a lot of traders, I think, veer off the path is, you know, they understand the Black Friday time to buy stuff, but, you know, sometimes in the market, they whatever reason, they just check their brains in at the door. So now what I'll move on to is how to use order flow to derive support and resistance. And again, you know, that's where the volume footprint chart is going to come in for you. And if you're not using it, you should consider it because that information is available to all traders. And all you gotta do is you get either get my software, or you get, you know, there's other software for less money, but, you know, obviously doesn't come with the training. But that's regardless. I mean, you can, if you want, you could spend a couple of years looking at it and hopefully pick it up, or you can, you know, take a course on it and learn it. But you can see when the market hits a level, the volume, and that's important because how are you going to have resistance if you don't have volume, right? You need big volume to give you resistance, just as you need big buying volume for support. You know, without big volume, can you really say that it's support? No, you'd just be guessing. But when you have very strong volume at the high, then the market's selling off, you know that's a strong resistance level. And, you know, another example is we already made a high and we're starting to come off. But, you know, maybe you don't see the resistance selling up here at the high because the resistance selling is coming in just after the high. And why is that important is because, you know, if you've ever traded for size, big size, you'd understand this, is because when you're trying to move a big position, you don't just go in and plow through the market. No, you got to work it. You got to finesse it. You hit the bids, you work offers, you hit some bids, you wait for the market to come up, you got offers in there. Basically, you're capping the market. You're working resistance selling. So anytime the market starts to tick up, you're there to catch it, to absorb it, and sell as much as possible, right? And unfortunately, sometimes you're so big, you're not going to sell everything, and you're going to sort of step the market down a bit, and it's going to go lower and lower. And if you're not using order flow, you're not going to be able to pick that up, just by looking at a bar chart. Maybe on a dome you could pick it up, but again, it takes practice to pick it up if you're looking on a dome, because there's a lot of numbers on there. People ask my opinion on a dome, and don't get me wrong, I have domes, right? I have the Jigsaw dome. I've got a couple other domes as well. Obviously, all the systems nowadays have trading domes, but people ask me, what's the difference? And basically, having a dome on your trading system, unless you're an experienced trader and can control yourself, it's like having a slot machine on your desk, because you keep seeing the numbers changing and the market's moving. You want to participate, you just start jumping in sometimes. That's how that's my analogy for it. But again, this is soybeans this time, right? You're coming into the lows, you got supportive buying coming in here. In the order flow, you got to know how to read it, right? I'm not trying to teach you how to read it. What I'm trying to say is, if you use the order flow, you can see it, right? It's pretty obvious. And again, it's not about trying to pick highs or lows. It's what the market is telling you is happening. It's telling you buyers are coming in. You can see the volumes on the bids and the offers trading down here, and it's a lot. 700, 500, 600, 600, 500, 600, 600. When most volume levels are in the 100s and 200s. So I know coming in down here, I got strong buyers coming in. Then we start ticking up higher. Again, I still see strong supportive buying, 500, 500, 800, 600. I know there's still that supportive buying going in. So if I'm already long, that's good, right? Because I know that I've got the buying coming in after me. And as a trader, when you get into a position, that's not the end of the trade. You want to see the other buyers come in also to sort of lend support to your position, your view. Because if you're long and no one else is buying, market's going to struggle to go up. I mean, you can't sit and stare at the screen and pray that the market's going to go up. No, the only way it's going to go up is if you got additional buying coming in. But say you miss buying on this low, your second chance is watching as the market's moving up. Do you still have supportive buying? And you can see it in the order flow. If you know how to read order flow, you can pick it up. Boom, boom, boom. And then we keep going higher. Another example is buns, right? We're making new highs, and anytime you're making new highs or new lows, you should be asking yourself, are we going to keep going higher, or are we going to keep going lower? And if you see supportive buying coming in at highs, there's a very high chance you're going to go higher, right? You see it a lot in commodity markets. Like things like crude oil, right? This morning in crude oil, we started making new highs, spiking up 20 cents, 30 cents. And what happens? You see supportive buying coming in after those new highs are made. So there's a good chance we're going to go higher. So, I understand order flow is very confusing for a lot of people, and not everybody is going to get it. It takes practice. It takes a willingness to learn. Like I said, most traders are already, unless you're new, sometimes you're set in your ways and you have your way of trading, and that's fine. But I really believe that you should be able to add order flow into your trading somehow. And so what I did was, with order flows is, I worked with my programmers, said, hey, let's make tools that other traders can use to analyze order flow based on, my experience, and just work it on a normal bar chart, so they don't have to look at a volume footprint chart like this and sit here and make the decisions themselves. They just look at their normal bar chart and get the signals, right? In the past, everyone used to always be, arrows or triangles or dots. Now everyone seems to be moving more into zone trading, with different zones. But again, if you can take order flow, put it into a tool to use on a normal bar chart, then there's no reason why you can't use order flow in your analysis, right? And again, you can see how it's just picking the levels, almost, every single, not every single turning point, but, some of the major turning points in the market, right? You can see how, it picked this reversal here, this level where you hit this double top the first time. So when you come up here the second time, you know that you should be sitting up there lying in wait to, with offers to sell it, to catch the move down. Here's euro currency. And again, you're picking the reversals, right? On this low down here on the far left, if you're waiting for, a test to come in a little bit later, I mean, it came in 2 bars later, but if you're waiting for a real test, for the market to rally, come back down, you never got it. You missed this trade. You'd have to wait all the way back into here. That's 4 hours, 5 hours. And then you're going to miss all the other trading that's going on in between, right? You got a buy here. Yeah, this one kind of failed. I mean, I think that would have stopped me out. Excuse me. Drink some water. But then, but here, there's another buy. We rally up to a sell area. Hit that sell area, you sell back down to where you had support earlier, and you bounce back up again. And if you're just trading between the goalposts here, you're going to miss all these other trading opportunities in between. And that's where a lot of traders go wrong. I mean, they miss those opportunities. Those are the yum trades. And again, DAX, same thing. Yeah, you got to ask yourself, like here, right? Okay, you got a losing trade here, you got a losing trade here. But again, are you willing to risk this little bit to catch these big moves? It's all about risk management. That's what your trading plan is around risk management, managing your trades once they're on. And limiting your losses and letting the winners run, right? Because if it is true support or true resistance, it's going to stop the market, at least in the near term, that you can take advantage of the market movements. There's going to be times where it's just not enough. Like I said, the market's got a mind of its own. Nothing is 100% in trading. If it was, the markets wouldn't move. If it was so easy to figure out the markets would just trade at one price. There would be no daily price movement because it would all be figured out. That's why everyone says, well, trading is going to die because the algo is going to take away every single edge. Well, if it did, then there'd be no price fluctuation. But the markets are made up of many different participants and many different time frames doing trades for many different reasons. So the fourth part I want to talk about is taking advantage of market reversals, range-bound markets, and trends with order flow and support and resistance. And again, going back to the textbook theoretical example of support and resistance that everyone adheres to. Well, not everyone, most traders. This is not how the markets work. They don't sit here and go bing, 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 back and forth between support and resistance. They sometimes, they hit the resistance level, sell down through support, rally back up through resistance, go sideways down to a different support level, back up. If the markets move like that, hey, it'd be lights out for everybody. But markets are dynamic. They don't move straight up or down, and there's different market conditions. And as a trader, you have to have trading plans to take advantage of them all. You got range trading, you got trend trading, you got reversal trading, right? The market trades in a range. The studies show me about 70 to 80% of the time, and then they trend, the remainder, 20% to 30%. And obviously, before you have a trend, you're going to have a reversal. So, to me, there's 3 different types of trading opportunities, and you should have a way to take advantage of each of them. Because, if you're not taking advantage of them, then if you're just focusing on range-bound markets, then what are you doing? The market's trending. You're losing. Because every time you try to sell, the market keeps going higher, you're getting stopped out, right? So you should have a way to take advantage of when the market's in a range-bound situation. Then if your trading plan only works in trending markets, what are you going to do when the market's consolidating, which it does most of the time, right? You're going to be losing because you're going to be whipsawed back and forth because the market's consolidating and you're trying to trade breakouts, but the market's not breaking out. It just stays in a trend. So that's why as a trader, you need to take advantage of the 3 different types, ranges, trends, and reversals. And that's why I prefer order flow, because you can take advantage of the different market conditions because you're trading what the market is telling you is going on. And, what do I mean is, if you're trading reversals, or you're trading resistance rather, okay, there's a resistance level the first time here, okay, based on the order flow. You could get in if we circle back there, right? You're not waiting for it to circle back and then get in. Ahead of time to get in, right? And then as you come back up towards it, if you're seeing something in the order flow, if you're seeing aggressive, if you're short and you see aggressive buying coming in the form of market imbalances, it's telling you things have changed in the market and we're probably going to blow through that resistance level. And you can see as we're rallying back up through the resistance with aggressive buying here in the form of imbalances, we just blow right through that level. And, on a market that's selling off, market's in a trend down, right? Like I said, you want to have something to help you confirm that, the market is actually trending down. And if you see if you see resistance selling in the market that's selling off, then you can be safe in staying short, right? But then if you hit a level where you see a lot of supportive buying coming in, you're going to want to lighten up on your position or get out or reverse, right? I mean, you're selling off, you're seeing a lot of resistance selling on the way down. You even got a signal with the order flow. Then you hit a level and you see strong supportive buying coming in the form of the order flow. You get, you cut your position, you can get out of it, get long, and ride it on the way back up. Just as if the market is selling off again, why does the market sell off? Because there's a lot of supply in the market. Someone's trying to get rid of a big position. They're trying to distribute it to everybody else, right? And at some point, buyers, the market's going to sell off. Buyers are going to come back in. But if there's still that big seller, he's still got a lot more to sell. So he's just lying in wait for these people. It's like you go fishing, right? You put your bait in the water, the fishes come and nibble on it, but if you've got a lot to sell, you're waiting for these guys to come and nibble at it, and then you slam them again, right? You stuff them, and the market sells off again, right? That's why you see how the market sell off, go sideways or bounce up a little bit, and then get slammed and sell off again. It's because someone's working a big order, got a big position, they're trying to sell, and they're waiting for the market to bounce up, because why keep selling it, right? If you keep selling it, you're just going to get a worse price on your fill. The big trader is going to get a worse price on the fill. So why doesn't he sell it, let the market catch its breath, rally back up a little bit, sell some more, get a better fill? Every tick counts nowadays. Every P&Ls, such big size nowadays that a tick on 2,000 contracts is, you're talking five figures. And again, it's not about picking reversals or market lows or market highs. It's about reading the order flow, what the market is telling you, what it's revealing to you, right? The market is a book. It's an open book. It's all the information is there for you to see. Okay, how do you interpret it? That's the important thing. And if you could read that, hey, I got a support level down here based on the volume that's trading, it's larger than normal, then hey, you know what? You've got supportive buying. And again, what I've done is I've taken this analysis and I've had it coded into a simple add-on that will run on NinjaTrader. We got a Sierra Charge version coming out in about a couple of weeks. And if you're interested in that, just let me know. I'll put you on the waiting list for it. Just to find these areas where you've got resistance selling in the order flow or supportive buying in the order flow, right? And, is it 100% perfect? No, but again, nothing is. You had a big resistance selling here, but you know what? Buying just overtook it. Okay, well, as you know, support and resistance, what was once your resistance becomes support. And look at this. This is your resistance level here, this zone. What is it now? It's your support level, right? You can see how the market rallies up past it, comes back down. It's now your support level. We hit that area and we shoot back up, just as here, right? You had the support level. You draw it out. You could almost see, previous bottoms become tops, right? This is your bottom. Now it's becoming your tops, right? I mean, that's basic support and resistance trading right there. But again, most people, they miss all these trades because they're just more focused on the goalposts, the highs or the lows, that they're missing out everything that's going on in between in the market. And that's where traders, professional traders really clean up. And again, like here, this is a crude oil, and we just rallied straight up. You had that supportive buying early, very early in the morning. This was 7:30 in the morning. The rest of the morning straight up. But if you're waiting for this market to come back in here to test the low, so you can have your confirmation, you missed the entire move. You weighted yourself out of the trade. And I think that's the tragedy. And again, NASDAQ, right? Excuse me. We got the high of the day. Again, it's not about picking highs or lows, but if the market's telling you there's resistance there, you sell it. What happens? You sell off, go sideways, come back up here. All of a sudden, you're running into this area. You're going sideways, but in this sideways area, you got very resistant selling. And what happens? So you got a little last attempt at buying, but boom, then it gets slammed here. You got the big selling going on here, and it just falls over down into new lows, goes lower. Okay, so now this is the interesting part, right? Talking about risk analysis, right? Trading with very tight stops, right? Everybody wants to have tight stops, and there's no reason why you can't have tight stops. And again, if you could read the order flow, right? You got 3 points here, A, B, C, right? The first time is A, second time is B, third time is C. First time you hit it at A, if you know how to read the order flow, and there's resistance there, you work offers here in this red area for the pullback, right? So if it comes back up into this area, 51.72, 51.71, you already got offers there. So you could catch this move back down, right? And where do you place your stop? You just place your stop right on the other side. You're not placing it way up here. And when traders wait for confirmation, right? You have your high here. Okay, we got another high here. Now you can get short. Where are you getting short? You're getting short way down here. You're getting short 10 ticks away from this high. Well, why? You should know. You should be able to know that, hey, I've got resistance here. And if you're using order flow, you can know that. So you can be lying in wait with your sell order in here already. As soon as you hit that high, you start coming off. Okay, you put it up here. Boom, you hit it. You sell off. From 72 all the way down to 47. That's 25 ticks. I'm not saying you get 25. Maybe you get 15. Maybe you get 20 ticks out of that. But if you're risking 3 ticks, right? You're just risking 3 ticks, but you're getting back, 15 or 20. That's a terrific risk-reward ratio. And again, you're also getting the same thing here at C. You already know you got a resistance level. Most traders are going to miss this unless you're using order flow to know that there's resistance selling up in here. Another perfect example, right? This is euro currency. We got the resistance selling appearing in here earlier, so you know that you should be working some offers up in here for a pullback with your stop just right above it, so you could catch this retest of it and the sell-off. Bonds, great example. You got the supportive buying coming in down here, so anywhere from a tick or two above the green, the blue area to within the blue area is where you should be buying, because sometimes you get a pullback, right? Pullbacks are tricky to trade for some people because it can pull back within a tick, it can pull back inside the area, it can actually pull back through it, depending on how sharp a move it's got to come back down in there. But definitely, you should be looking to buy whenever you can inside that area. And if you're buying it at 154 even, hopefully, or even 154.01, you're talking to move up to, close at like 12, but maybe you get 10 ticks out of that in the bonds. You're risking 3 ticks, that's 3-to-1 risk reward. This is yesterday in the E-minis, right? We made new highs, kept making new highs, but there were signs. If you knew how to read order flow, or you had a tool that could read the order flow for you, that when you're coming up in here, you're going to run into resistance selling. You could get short. You could be sitting in there with offers. And this was the sign, right? This was that high. The first time you hit it, I know that there's resistance selling based on the order flow, that I could be working offers in here. You could be working offers at 87.5, 87.75. And what happens? It trades right back up in there. And then it sells off down to, down to 85, 85.5. And where's your stop? It's just right above here. That's how tight it can be. Are you going to get stopped out a few times? Yes, you are. But if you're getting 5-to-1 risk-reward ratio and you're getting stopped out, half the time, that's a good trade. That's good percentages. This is yesterday. This is in the buns, right? You have your low, you shoot up, then you go sideways. And then you shoot up again to new highs. So you went from your low to your highs. Okay, well, when you hit this high, you start coming off. You're wondering, what's going to happen? Should I be getting long, or should I be doing nothing, or are we going to come back down into the lows? But if you can read the order flow, or you had a tool that could read the order flow for you, you know there's supportive buying appearing in these areas in here as it happens, as soon as it happens. So if you were to draw these zones out, both of them, this is what it would look like. You know that if you're going to test it again, come back in here, you'd be sitting in here with some bids, 48, 49, 50. What do you trade? You trade all the way up into the 60s. Again, you actually made new highs above 65, 60, I think to the 70s. But again, how are you going to know that if you're just looking at, a chart like this? You're not. I mean, people are going to say, well, yeah, you got this double bottom here, but this is where you should be buying it, in here. Not saying, oh yeah, we got a double bottom, then you're buying it over here. No, you should be buying it when it tests it. But the way most people use support and resistance is you're waiting for the retest and waiting for confirmation. And if you can't get that confirmation unless you start moving away from there, right? And that's where a lot of traders fail. So hopefully by now you should agree this has been time well spent. And I got a special offer, right? I got the new indicator, which I was just showing you on the chart. It's called the Valtos support and resistance levels, SNR levels for short. And it runs on NinjaTrader. Like I said, we got the Sierra Charge version coming out in about 2 weeks. My programmer is working on it. I just spoke to him today about it. And I sell it for $500, and it's a great tool. It's a great tool for experienced traders and for new traders, because you always want to be refining your entries and exits and getting better exits and better entries. And I got a special bonus. If you get it today, you're gonna get access to a live training session next week on Wednesday, the 22nd. It's at 7 p.m. Central Time, and you'll also get recording to last week's session, or a couple days ago actually. And that alone is worth about $300, right? Because it's me answering your questions. You ask your questions, it's a live webinar. I show you live charts. I show you for the day. And what else you're going to get is you're also going to get my settings, right? Settings for about 10 different markets on different chart types. Minute charts, range-based charts, everything. But just don't take my word for it. Other people have been using my software, using my courses, and they're writing stuff out there. This is on Facebook. Sheila writes, thanks for introducing me to order flow. It's remarkable. It's helpful. I get to see who's in control of the market on a very specific time. Who's getting stronger or weaker in the market. It's very useful for everybody. And you ask yourself, what would it be worth to you if all these give you better trade entries, better exit locations, low risk trades, and if it solved your poor trading choices, where to place your stop and prevent you from blowing up your account. So again, that's $800 worth of software and training. But because of Investor Inspiration, I got a special deal. You get it all for just $250. Now the link is here in the chat. Just go to orderflows.com/SR special. It'll take you to the page. And again, this is not a special that's going to be there forever. It's only until Sunday night. So, and you can only get it through this link. There's no other way to avail of this. You can't go to my website and get it because it's not even on the website. It's only available through this link. So again, you're going to get access to the live training and get the indicator, and you're going to get the settings. And again, give it a try for 30 days. What have you got to lose? If you don't like it, if you can't make it useful in your trading, then let me know and I'll refund your money. I'm not out there to squeeze money out of people. Order flow is not for everybody. And, I don't want people to think I'm out there to scam them. Because, trading vendors, it's kind of a slimy business. But you got two choices. You could do nothing and just be the same you always are, and a year from now, just, piss away $10,000 on trading accounts. Or your second choice is invest a little in yourself and get started, on your trading journey. So again, it's you get the software, you get the live training, you get the indicators, settings. You're ready to go. And if you stuck around to the end and you want my book on order flow, just email me, Mike@orderflows. Put in the subject line, send me your book, and I'll reply to your email with the link for it. You don't get the actual bound book like this. It's a PDF that you could print out. Like I said, it's 150 pages. So just email it to me, and I'll flip it out to you. So again, just go to orderflows.com/sr special.html. Again, it's not available on my website at this price. Actually, the whole indicator is not available on there. I haven't really released it to the public yet, but there's about 30 people, over 30 people that are actually actively using it, and a lot of people are very, very satisfied with it. So, I don't know if you can see my screen here, but this is a chart of the crude oil today. Boom, you can see it's picking these levels pretty accurately. So